Bloomberg Audio Studios. Podcasts, radio, news.
MTN Chief Executive Officer Ralph Mupita joining us today. Ralph, thanks so much for being with us today. So I want to just start with what you noted in the earnings report, which was macro headwinds that the company is dealing with, one of which, pretty big headwind, is currency volatility. I mean, how is the company thinking about protecting itself going forward from this? Because it's happening in a few different markets that you operate in.
Yeah, look, I mean, our underlying performance from our point of view was very strong and resilient. We look at, how is the business actually developing in terms of subscriber growth? What is the traffic we're seeing in our network? What is the transaction values and volumes you're seeing on the fintech platforms? Those have been strong and very encouraging. And when we look at that kind of underlying performance, pretty much across most of our markets, kind of basically trending in line with expectations. The two main challenges that we faced in the period, one is the very sharp devaluation of the Naira. The Naira ended last year at 907 versus the US dollar. In this half, it's averaged 1500, so quite a lot of volatility. But between Q2 and even up to now, the Naira has been actually fairly stable. And on more recent forecast, if I use Standard Bank Group Securities forecast, the pressure on the Naira is projected to abate somewhat, as inflation expectations are that inflation in Nigeria should start to come down, and that rate tightening cycle in Nigeria will remain and therefore take pressure off the Naira, going forward. So, if you exclude the Naira impact in particular, actually we had a very decent top line growth, would have had a decent set of earnings growth, so the underlying business remains strong, and we see growth as our best way to protect kind of the earnings stream over the next the medium term to kind of restore positive earnings growth for the whole business. But the main issue has been the Naira devaluation.
Yeah, and in particular with that, Ralph, I mean, that Nigeria accounts for nearly a third of the company's earnings. So are there things that you're thinking about doing as you sort of await for the volatility to abate?
Look, I mean, on the volatility side, I think it's much more nearer term, so it's not medium to long term. As I mentioned, inflation cycle is anticipated to kind of peak in Q3, maybe a little bit into Q4 and start trending down. If I use Standard Bank forecasts on inflation, Nigeria should be somewhere like in the early 20s from the kind of early 30s. So that moderation, should also relieve some cost pressure in the next couple of quarters. But the underlying growth in Nigeria is very healthy. The one big issue we remain focused on is really around, some tariff increase relief that we'll need. Expenses have been growing quite sharply. So we've been engaged with authorities around a tariff increase, which should then support the restoration and growth of earnings. But beyond Nigeria, in South Africa, we had a decent set of results. Our service revenue was up 3.3. That's a business that we think has the potential to grow 4 to 6%, given the capex that we've put into that business. So South Africa can step up a bit more in the near term in terms of its own top line growth and its earnings contribution. The rest of the portfolio, Ghana has been growing actually very, very strongly. Ghana, continues to grow, both the data and fintech businesses, all above, 40% on those bearers. So there's a portfolio effect of the other markets that can also grow. And the fintech business in the period grew very strongly. 27% service revenue growth, the EBITDA margin growth, the EBITDA margin delivered by that business has also been very, very strong. So when you look at the portfolio, I think you'll see different parts of the portfolio, contributing to the overall group results. And as I said, in Nigeria, there's still pent-up demand and growth that we see for both the core connectivity business and our fintech business.
Right. Ralph, just sticking on the other parts of the portfolio, also in Iran, on the earnings report, you noted the uncertainty around what is happening in Iran, especially with sanctions from other countries. I mean, are there plans to adjust or speak with authorities there? How is that affecting the rest of the group?
No, Iran, we've continued to manage Iran in the same way over the last 5 years. Since the US sanctions came in, we haven't been able to get, any of the dividends in that market out. Obviously the SWIFT financial system is not open to Iran, flows. So, the accumulated dividends that we are on lending the company in Iran is about 3 billion. So we don't anticipate to see any upstreaming, coming out of Iran. But what we reported was that the earnings grew there by, over 80%. And that's, a very healthy clip for earnings growth in Iran.
Are there markets, Ralph, that you're potentially considering exiting? MTN is considering exiting. I mean, we talked about Iran, potentially the challenges that are there. But there's also been some challenges with Sudan as well. And that's another geopolitical story that's having an effect on the company. Are you thinking about potentially exiting either of those markets?
So the market we've announced we've done the exit on, it is Afghanistan. So we've completed the exit of Afghanistan in February. And now we've done Guinea-Bissau. So Guinea-Bissau is done. So what we're working with, we have an offer from Telecel to acquire Guinea-Conakry. So those are the markets where we have exit plans in execution. Sudan is challenging, for sure. The ongoing conflict makes it very difficult for us to be able to provide consistent connectivity. Some sites do come down as a consequence of the conflict there. We continue to, best we can, to keep the network up. So we are putting, more sites back on air to enable connectivity. There's been a massive dispersion of the population of Sudan. It is really, tragic what's actually happening there. Kids, 19 million children not going to school since April of last year. So, these effects are very profound. So in Sudan, we're continuing to manage best we can. We have had the impacts, the impairment we took, and also the impact we've seen on growth. But, the exit plans, as formally communicated, the only other market we're looking at right now is Guinea-Conakry.
Okay. So no plans in the near term for Sudan at this point?
No plans.
Okay, no plans. Ralph, before we let you go, I wanted to know what you envision the business looking like in the next few years. Obviously, there's a lot of macro headwinds that you can't anticipate how it's going to affect the business. But how are you thinking about it and your growth strategy over the next few years?
Yeah, we believe that in the markets that MTN operates in, we've got two main engines of growth that are structural because of pent-up demand. The one is data. Now we have about 60% odd of our customers are using smartphones. Means the balance is still using 2G capable phones. So the growth rate in data adoption remains very strong. So we see that as fueling growth. On the fintech side, many Africans are excluded from financial services as we know it. And we've been building a platform there of more modern services, including remittance, bank tech, payments, and e-commerce. And that's actually fueling growth. As I said, the growth rates that we're seeing there on these advanced services have been about 58% growth in the period. So those two in particular are going to fuel growth. And we anticipate that, going forward, you'll still see growth driven by data and fintech. I think what you're going to see more and more is, carving out the infrastructure, particularly around fiber, and, creating an opportunity of co-investment with third parties to accelerate, investment in infrastructure. We're not using our own balance sheet. We're going to focus on partner capital there as well. But I think the three drivers of growth will be the connectivity business driven by data, the fintech business as we move into more advanced services, and infrastructure, in particular, fiber and data centers. And there you're going to need partnerships, to be able to create these also open access, platforms, and also leverage our partner capital. There's no space on our balance sheet to fund all that growth, but we can seize the opportunity with a much more partnership model. That's how we see the business going forward.
Does that sort of speak to as well to the IHS partnership with MTN? I mean, is that sort of getting past the previous issues that the two companies had? Is that part of the future growth strategy that you're thinking of?
No, the way we think about infrastructure, many companies look at telco infrastructure and they, have the tower co, the fiber, and the data centers as different verticals. We've sold most of our towers already, and they're all sitting in our investment in IHS with a 26% shareholding. So in the way we think about infrastructure, there's no tower companies there. It's mostly on the fiber and the data center side. So what we are focused on is, how do we get, to see value being truly reflected in the IHS share price. We think the market undervalues that business. But it's for the management team there to demonstrate by execution that the business remains fundamentally undervalued. So at these current share prices, for us, we're not looking to sell out of IHS, at the current share price. We think the business is more valuable than this. And, the governance issues that we've had in the past, as we communicated last week, we're looking to amicably resolve them, particularly now that the major contract renegotiations in Nigeria in particular have now been closed. That's been a successful set of discussions. And so we'll move into discussing the governance issues over the next while ahead. Myself and Sam Darwish will be talking around those, and we'll take proposals to our respective boards in due course.
Are you expecting the market then to value the company at sort of somewhat closer to what you're expecting, or do you think this might continue a little bit longer?
Look, it's difficult to say. There are, I think part of the impact on the IHS share price is also the uncertainty, or what the market may see as uncertainty around Nigeria. Can you get currency? Can you get hard currency? Where is the Naira going to find its level? So I think there are some uncertainties that you'll see into the IHS share price, which you see similarly into the MTN group. I think also, IHS, has got a particular debt profile and maturity profile. I guess the market is looking at that. But I think the governance concerns, if they are addressed amicably, I think will take, quite a bit of uncertainty about the long-term prospects of the company. So I think the market, will see a conclusion on governance issues very favorably, particularly, that these are amicably agreed between IHS and the MTN group.
All right. Ralph Mupita, MTN Chief Executive Officer. Really appreciate your time today, Ralph.